Hello, this is Robert Dumas from TaxConnex. This is step 5 of our 5-step process for getting your company sales tax compliant. Step 5 is implementation of your plan. And before we go into the details of implementation, let me recap the 5-step process. First, you need to determine the states in which you have nexus. And as we said in our first video, nexus basically means you have sufficient physical and sometimes non-physical presence or activity in a state where that state can force you to collect their sales taxes. The second step of the 5-step process is determining the taxability of your products and services. In general, the sale of tangible personal property is subject to sales tax in most states. In general, services are not. However, depending on the states you have nexus, you need to be careful that you apply those general rules carefully in those states. The third is prior period exposure. If you have not been collecting tax in those states in which you have nexus, it's very important that you determine any prior period exposure you may have for unpaid, uncollected sales tax liabilities. The fourth step is determining your strategy for clearing your unpaid liabilities, in other words, getting those off the books, and prospectively getting your company in compliance. Now, step 5 is implementation of your strategy, and that's what I'm going to talk about for the remainder of this video. There are basically two ways in which you can implement your strategy. One is quick and total or slow and partial. Obviously, if you have the cash, quick and total is the best way to go. In other words, within a 6-month period, you can implement your plan, have your VDAs done, get your company registered in the various states, and begin compliance. Or, if cash is potentially a problem, you can go slow and partial in that you pick the states with the most risk, the most liability relative to your cash, and begin the process on a state-by-state basis. So in other words, and not doing it in your entire footprint, but doing in part of your footprint based on your revenue. Some advice for you. Be deliberate. I've seen so many clients that have identified their exposure have become so overwhelmed by the process, the amount for one thing, the idea of having to give up the cash, and the process for getting cleared that they take no action. So I highly recommend that you make a decision and be deliberate. And if you can't do quick and total, do slow and partial. You have to remember, your sales tax problem is going to grow each month. Sales tax is imposed upon your receipts, your revenue. And as long as you're in business and collecting revenue, your sales tax is going to be due. So it's a monthly problem and you don't want it to grow. The other thing I'd like to suggest is that you seek help. Leverage the experience of a sales tax professional that has gone through this process before and can help you implement a strategy that works for your business. Thank you for joining us for this 5-step process. I hope it helps your company get into sales tax compliance.